Welcome to today's webinar on utilising Xero's features. Like that was explained, the things that we're mainly looking at is the business analytics that's available to you and how you can sort of leverage your dashboard so that it suits you and it's showing you what you want to see immediately once you jump into your Xero file. So for today, I'm utilising the demo company. And as you would probably know, the demo company is not great with what it feeds through, but it does enough to give you an idea of what you could do within your Xero file. And as always, we always encourage clients to give us a call if they want to have something more specific for them, a question answered, or understanding where it is you can find that certain information, or just to sort of go through it with you. Okay, so first of all, the business analytics feature, it's found under the business menu, and you'll find that there's two areas there that you can view. So the first one being that short-term cash flow. So this is really important if things are getting tight and you're not sure what's on the horizon. So why not utilize Xero's analytics to help predict what's about to happen and what's on the up and up for you guys in your business. So you'll see that, yes, we're just using the analytics. There is Analytics Plus, which you can pay for yourself as a small business owner. But in this case today, we're just looking at what everyone that has a business subscription can view in their Xero file. So first of all, it comes to this dashboard. And what it's doing, it's telling us what's happening over the next 30 days. It's also telling me which bank accounts it's looking at or analysing the data from. And in this case, the demo company has two bank accounts linked up. It's got its business account and a savings account. Say you didn't want to have a look at your savings account because in your mind, you'd consider those funds were gone. Maybe they were put aside for GST or some other things. So you could actually untick one of the bank accounts if you didn't want to have a look at it when you're reviewing your figures. I'll just leave it on for this case. More data will give us more responses. And then you've got your projection time frame. So you can choose 30 days or 7 days. It's always good to have a play around and see what fits you in your business. So in this case, you can see here that there's not much cash coming in until after the 14th of November. And that's when the cash is coming in. And it looks like it's in a positive space if those invoices are paid on time. So you'll notice that there's a button here called the update overdue. So what you can do is you can have a look at overdue invoices. So you know that accounts receivable process. So who owes you money that hasn't paid you yet? When are they due? Are they going to pay you on time? So when I click on this, I can have a look and I can see that, you know, there's an amount overdue from City Limousines. This one's 88 days overdue. A phone call should be made or it should be followed up in order to get that. Then you might want to go back and have a look, well, what are my bills? So if I'm putting my bills into Xero, what have I got coming up that needs to be paid? And you can go through and have a look, and you can have a look at the schedule and go, wow, I've got a lot that's outstanding to, say, Bayside Wholesale. I've only got a day until I need to pay it. I actually need to probably give them a call and request an extension for it. Or you might even go as far to go, I've got an extension for this payment. I'm actually not going to pay them until the following week on the 19th. So you can update that due date right here, and it really shows you straight away what you've got to pay in the next 7 days. So you notice that that figure there was altered because I moved the due date of that bill to be paid. I could also have a look at the 30 days timeline and see, well, what's going on. You know, I'm in a positive cash position. It's probably because I'm in a demo company, but it would give you a bit of an idea of what's your runway up until Christmas and, you know, what is it that you need to do. Remembering this data is all reliant on the invoices that you've got going out and the bills that you've already got loaded. And you can see here it's got that projected end balance, which is what is sitting here at this particular point in time. So now let's have a look a little bit deeper down. So with the breakdown, you can also have a look at what's coming up on the days. You can group it by day or you can group it by week. So it's showing you what is coming up in the next 7 days here for the week as to what bills is coming up. So you can see that you've got some transactions that are coming up, you know, different bills that need to be paid in there as well. So you can see what's coming up, and then you can go week on week and see what information there is. so that you have an idea of, you know, what invoices are due and what bills are going to be paid. You can see in this case, it's only a demo, so there's not, the bills are going in, but they're only sort of giving you 7 to 14 days of visibility of what's happening. How you run your business will be what information is provided to you. There's also this really, and there's another view you can do, so you can do a table view as well of it, or you can just do the summary view of it as well at the top. Now, Xero is intuitive, that's why we love it. And it's telling us, hey, you've got some overdue invoices. Maybe this is an action you should do. Maybe you should ring, follow up, chase those accounts receivable so you can get those funds in. And then there's another space of, well, what other actions should you do? Well, you've got a heap of overdue bills. What can I do differently, you know, to make this figure work within my maybe restrictions in business? It could be that you're waiting on some cash to come in, but it's not coming in for another, say, 20 days. So you might want to call some of these suppliers that you work with so that you can get an extension and explain to them when they can expect those invoices or bills to be paid by them. That's going to help build that relationship with them and understanding and working with you. You'll notice that there's an area here that's locked, and that's because it's to do with Business Analytics Plus. And that's that paid subscription, so it can give you those 60 and 90-day projections. Whereas if you recall, this one we're looking at is only the 7 to 30-day projections that it gives you. So it's a pretty cool little tool. So that's looking at your short-term cash flow. Now let's go up the top and let's have a look under the menu again, under the analytics, and let's have a look at the business snapshot and what we can do here. Now this is pretty good for being able to look at it and go, well, what key performance indicators should I be tracking for my business? When I look at this particular screen, what sort of jumps out at me and goes, oh, that's good, I should be tracking that? Or are there some things on there that you're like, that's not looking great, I might start tracking this and then taking action on it to make, you know, that number get better? And we'll talk about how we could do that. So let's go into the business snapshot. So there's a couple of different items in the menu that you can select from. The first one being accrual or cash. So that's the different, like, are you cash basis or accrual basis? Normally when you're a small business, you operate on that cash basis. So what comes in and what goes out. Accrual might be, you know, what have you got invoiced out and what bills have you got coming up to pay as well. So it doesn't really matter which view you prefer. I'll just stick to the accrual at this particular point in time. And you can see that there's different menus in here. You can edit different metrics in here. So choosing the bank account that you want to utilize. Again, same sort of thing. Maybe you don't want to review, include the savings account in this business snapshot report that you're going through. And then you'll notice that you can also choose, well, what sort of window do I want to look through? If you're running your profit and loss report in your business already on a regular basis, this can kind of happen in lieu of running that report or in conjunction with it. So you can choose, you know, what sort of period you want to be looking at. So in this case, we might just want to look at, say, the last quarter. Let's see what data is in here. And then we go through all these different, I suppose, little graphs and charts that they have available for you to review. And you can see it's really clever because it's grabbing the data from the previous period of the previous year. Because with business, there's always ebbs and flows. And you'll notice that if you're in retail, that you've got your different peak periods. So Christmas might be a peak for you, and there might be different occasions throughout the year, depending on what's on the calendar, or maybe it's where you live, as to those peak periods which vary for you. So that's why it's comparing. It's not just going from last quarter necessarily. It's looking at the previous time the year before, because that's normally how we sort of compare in that space. So as you can see here on the profit and loss, it's saying that it's up 50%. The loss is up 50%, so that's probably not a good sign in this particular demo company. And then if you're looking at the income It's sort of telling you where you were in 24 compared to August 23 and moving along, and the expenses are exactly the same. So as you can see, the expenses in this particular demo company have skyrocketed. So maybe there's a reason why. Because the reason you are looking at this and wanting to track your key performance indicators is because you want to make better decisions in your business as to what's coming up, what's different from the year before, and do I need to make some changes or take action on the business, or do I keep leveraging what I'm already doing? So I encourage you to jump into your Xero file, like get it reconciled and have a look and see what you've got. Now, moving further down the screen, you'll see that there's some other things. These might be things you might hear your accountant talk about, or people that run their reports regularly. But there's no harm in you being able to start to understand what these mean to you in your business. So here it's talking about like what's the net profit margin for your business, and it's got a really clean-cut explanation in there that for every dollar of sales revenue, there's an average loss of 12 cents being made, which is 12%. So every time you're selling something, you're actually making a loss. So something's got to drastically change in this particular example, because every time you sell something, you obviously want to be making some kind of money. And then it's got like a gross profit margin, so that's sitting at 100%. So it's saying here that for every sales revenue, the average gross profit is $1 is made. So, GP is normally something that a lot of businesses track, just so they have an understanding of where they're sitting within their industry, and that they're sitting within those guidelines. And there's guidelines you can find on the ATO website. So next, what it's doing here is analysing all of your operating expenses, so you can have an understanding of what's up and what's down. So in this case, for this demo company, it could be that they've got wages and salaries this year, whereas last year they didn't. So maybe they've gone through some growth where they've had to do some hire. Maybe they've started renting a premises. All those little things that are different from the year before, from the period before, that you can start analysing. Now, these little snapshots you'll see here down the bottom, I'll just see if I can move this. You can actually turn this off if it's too much noise for you, or you can turn the financial ratios on, depending on how comfortable you feel with them. So ratios are sort of just telling you every time you do this, this is like the ratio that you're sitting on. And ratios, you can find ratios quite helpful in your business if you know which ratio it is that you think is going to suit you to review. And that's just a matter of going through and looking at it regularly and seeing what the so what is. So what if this is telling me this? If I did something differently, like maybe invested maybe in some marketing, what would the ratio look like? Would I get the sales that I'm after in order, if I make that investment? So what it's saying here, you've got for every dollar in current liabilities, you've got 68 cents of current assets. So you've obviously got some debt in there as well that's gone up in that particular period. You've got that different debt ratio there. So because there's not much information in the Xero file, it's saying it's steady, but it's saying pretty much that for every dollar of assets you've got $1.49 of debt. So not a great position to be in, but it might be for a certain reason. Maybe you've made an investment on a piece of equipment that you needed for your business in order to advance further. And therefore, you can go through each of these and understand what is, I suppose, suitable for you. And if you recall, looking at the last period, you might want to look a little bit closer. Maybe you've gone through some changes in your business recently that you might just want to have a look at the last month to see what's going on. So I'll change this. So from October to October, so it's just looking at like a 30-day period to see how you're trading and see what your ratios are. It's going to produce, you've got to decide on what it is that you're looking for and what it's telling you to know what's sort of fitting for you and your business. So that's the business analytics that you can utilize in your business to see what's going on Now, the next one I said I would briefly point out is on our dashboard. Our dashboard is where we go to when we need to do anything in Xero. It's the first screen that comes up. So organizing your dashboard in such a way that it presents the information that you want to see straight away, can give you some really good insights that you'll notice straight away. So you'll notice on the demo company here that it's got like your cash in, cash out it's showing you. I always like this to have a quick look at. What you really want to see is there's more cash in than cash out, but obviously in this case, it's not working that way. And in the analytics we looked at, it wasn't a healthy business. So, this gives you a really good snapshot of what's going on. Just like on the analytics, it's talking about invoices and bills that you need to pay. So it's sort of telling you what's coming up. And you can see that there's been some charts that have been tagged for a watch list. So how do you go about changing this dashboard? You just go up to your top corner and hit Edit Dashboard. And then within here is you can select what you do and do not want to show. So maybe you don't utilize expense claims, so you don't want that showing on your dashboard. Maybe you've got your business bank account you use, but you don't necessarily want to have your savings account on your dashboard. Maybe you don't want your team members to be able to see it when they just log in straight away. So you can actually remove that bank feed there as well. And then you can also move things around as you wish. So that's just simply as clicking and dragging. You can move your dashboard around the way that you want to see it. And then you can save your changes. So it's as simple as that with your dashboard and arranging it the way you want it. If you wanted to take a look at this account's watch list and you wanted to say edit it, you can do that as well. And you can have a look and see, well, what else do I want to add to my watch list? What other accounts might I want to put on my watch list to see? So maybe you're pulling money out of the business and you really want to track what it is that you're taking out. So by tracking your drawings or maybe your loan account, depending on what sort of entity you are, you might want to track that particular chart as well and add that to your watch list so you can see what's being drawn out on your business. So pretty much they're the sort of things that I wanted to show you. It's a short and sharp session today, just so that you can have a bit of an understanding and then go in yourself. Hopefully you've got a bit of confidence about you to jump in and have a look yourself with your business and see how you might be able to incorporate this into a bit of a weekly or a monthly routine for yourself so that you can start to understand what the numbers mean and how they're impacting. So what decisions you're making and how they're impacting, maybe it's the profitability of the business. So the different activities you're doing. So hopefully this was of help for you.